What's up, guys? It's Alyssa and Nicole here with Blondes Breakdown Real Estate. I am so excited for our guest today. We have Patrick Capel. He is a friend. He's one of my mentors. He's probably the smartest guy I know, to be honest.
Yeah.
He has a degree from the Naval Academy, a master's in real estate science from the University of San Diego, and an MBA in finance from UCLA. So we're so excited to talk to him. Thanks for being here, Patrick.
Hey, listen, Nicole, thank you guys for having me. I'm definitely excited to catch up and talk about real estate today.
Sweet. All right, Patrick, before we get into specific questions we have for you, give us a little bit of background on you, how long you've been in real estate and what you work on.
Yeah, just a quick 1 minute. I started investing in real estate 12 years ago, so just over a decade out here in San Diego. And I have always focused on the San Diego market for very specific reasons. I now own 8 rental units, about to be 12 units because I just opened on a fourplex. Those along with my house that I own here in San Diego as well. I got into brokerage in 2016, so just over 4 years. And in brokerage, I run my own team at Compass, a Capital Realty Group. We've closed a little over 100 units in just the last 2 years. And we're charging hard right through this pandemic. We're charging hard. So along with investing, brokerage, I love my life. It's a lot of fun working in real estate.
And you're a veteran, and so you've utilized a VA loan to kind of get you going in some of these investments, correct?
Yeah, I have utilized the VA loan like 5 times, all on this house. But the VA loan has such great rates. Right now I'm seeing them below 3%. And I've used that as a way to invest. I just did a cash out refi in my house in March, right before things really started hitting the fan. I did a cash out refi, got a rate below 3, and I'm using the proceeds of that cash out refi as a down payment on this fourplex I'm about to buy.
So amazing.
So I'm like 100% financing a fourplex. Who can do that, right?
That's amazing. So Pat, you've been investing in real estate for quite some time. Are you holding back right now with everything going on with coronavirus?
No, not at all. I mean, I'm being maybe more cautious. I'm being a bit more judicious about what I put offers on. But as I just mentioned, I opened escrow yesterday on a fourplex in Imperial Beach. It's a block and a half to the beach. To be quite honest, I think right now is a great time to find deals. And what I mean by that is it doesn't mean you're necessarily going to get bottom of the barrel discounts on everything because it's San Diego. We have such a supply-demand problem in San Diego, way more demand than supply. We're probably not going to see price drops, definitely not significant ones. You will in other markets, Midwest, Las Vegas, Orlando, huge tourist areas. But what I am seeing is not in the single-family homes, but in 2 to 4 units, there's less sharks swimming around every deal than there were a year ago, which allows you a better opportunity to go in and get that transaction. The property I'm buying right now is the lowest priced sold fourplex within 2 blocks of the beach in all of San Diego County in the last half a decade. So there should have been a dozen offers on this deal, okay? 4 months ago, there would have been a dozen offers on this deal. Lowest priced fourplex in 5 years, but there were 2 offers on it. I wrote mine very strong with strong terms, so I was able to get it tied up. And I was a little bit surprised, but I was happy because right now a lot of people are fearful. Let's be honest with ourselves. But I always like to fall back on an ancient Roman saying, and that is fortune favors the bold. So those who are bold and are bold with a level of intelligence, otherwise you're just crazy, will find fortune over the next 12 months.
Awesome.
Do you think there's some opportunities in these multifamilies because there's less competition? Nicole, I just wanted to touch kind of on what we're seeing, and Patrick, you as well, on what you're seeing in the residential kind of middle class homes, because I'm seeing still a ton of offers on those. What about you guys?
Yep. In that
to 500,000, a lot of competition still.
Yeah, and let's differentiate single family home, multifamily, homeowner, investor. I'm seeing single family homes staying the same. The competition is just as strong as ever. My team put out 5 offers last weekend, 2 got accepted, okay? Everything had multiple offers. And the reason for that is as much as maybe buyers have dropped a little bit in the last month or two, sellers have dropped equivalent.
It's leveled out, the listings and the buyers.
Yeah, the supply demand equation is the same. That is not so much the case with investment real estate. We have seen more buyers leave than we have sellers on investment real estate. Why? It's because some investors have just become a little bit petrified and they don't want to make a move. That's pretty common when we hit a crisis, especially in unknown situations like this. But I always say, when you see something ugly in front of you, most humans will stand there petrified. They're scared, they're petrified, they get eaten alive by whatever it is. It's a wildebeest, right? Other humans will run in the opposite direction. They live to fight another day. Other people run at the wildebeest, and they will either die or get killed by the wildebeest, but that's the fortune favors the bold. So I say when you see a crisis, run into it, not away from it. Definitely don't do nothing. Don't be petrified. Make a decision.
Good.
But yeah, guys, bottom line is single family home market still very competitive. Pricing still very strong. You're going to have multiple offers. You're not going to get accepted if you're lowballing people. And our clients are learning that. Our clients sometimes are getting rejected 2 or 3 times before they're learning, look, San Diego market is not dropping. 2 to 4 units, that's another story. And it's not dropping due to economic reasons. It's dropping due to human reasons, and that's fear.
So let's talk about that fear a little bit in regards to the multifamily units. Some landlords are saying renters aren't able to pay their rent. Is that something that worries you with this purchase? Or would you say, to investors that are looking for multifamily units or even just a standalone with an ADU in the back, hey, right now is still a good time. You're still going to be able to find the renters, or, how would you kind of debunk that fear?
Look, if you got a renter not paying rent, you've probably figured that out by now because we've gone 2 months into this, April, May. And you're going to find out if they're not paying rent during your due diligence inspection period with the tenant estoppels. It'll show you the last time rent was paid. And if someone's not paying rent, then you just work that into the request for repairs. And if it's $2,000 a month and you think they're not going to pay for another 4 months, then maybe you do an $8,000 request for repairs.
Cushion it.
Yeah, you just cushion that. And the other thing, I mentioned this right before we started talking here, is a lot of people that have lost their jobs will actually be making more money for the next half year or so on unemployment than they made while working, because not only are you getting state unemployment, but due to the relief package that Congress passed, DC, the federal government, is giving $600 a week to those who are getting unemployment. That's an extra $2,400. When you add that with your state benefit, you're probably making over $3,000, $36,000 a year, $3,000 a month. And that extra federal stimulus they're giving you of $600 a week is to go to food, shelter, clothing, all of your necessities, shelter being rent.
Right.
So if a landlord has someone not paying rent, I would advise that landlord to ask the tenant to show proof that they're what their income
Not
is.
collecting anything, yeah.
Not collecting anything. And I don't say this, to be mean, but that federal stimulus of $600 a week is to go to food and shelter.
Right. Are you seeing tenants in your properties not paying rent?
No, they're all paying rent. They're all paying rent.
That's my family's properties as well. Everybody's paying for the most part.
Yeah. And the stimulus is helping them do so with the unemployment.
Yeah. The only challenge about the stimulus I'm hearing is I was talking to a restaurant owner and they can't get their employees to come back to work because they're making more on unemployment.
Yep. And that's going to happen. The federal $600 a week stimulus lasts X amount of months. I don't know.
That's true. Once it's over, then that
6
problem
months or so. Yeah.
should be solved.
Yeah. So how do you see the rise in unemployment affecting the real estate market in general?
And that's a good, it depends type of answer. So I don't think it's going to affect San Diego as much as it affects lower end markets. So let's first of all be honest with ourselves. The majority of the unemployment is due to the tourism industry. Okay, San Diego is a very diverse economy. No more than 16% of our economy is made up by any one industry, and tourism only makes up 10% of our economy. So 90% of San Diego's economy is non-tourism, meaning we're not going to get hit as hard as places like I said, Las Vegas, Orlando, San Francisco. Well, I'm not sure about San Francisco either. They have a heavy tech basis. But I don't see it affecting us that much. The other thing that you got to think about is, well, who's going to foreclose? Not that many people, because we have a lot of equity in our real estate. We have more equity in real estate now than ever in the history of humans.
Isn't
And
it
you
like
don't
40%
foreclose.
on average?
Yeah, you don't foreclose if you have equity. But
Right.
the other thing to think about is tourism industry, as much as it might get hit, it's a rather low paid industry. If you work in the tourism industry, again, in Las Vegas or Palm Desert, you can probably afford a home. And now you just lost your job, so you might have to sell. If you work in the tourism industry in San Diego, odds are you can afford a home. There's some people in tourism, don't get me wrong, that can afford a home in San Diego,
Right.
but it's a lower paid industry. San Diego is a very expensive market to get into, 600, 700K for a detached home. So I just don't see us taking the hits that some of the tertiary and secondary markets will take.
Okay.
As far as renters, though, we already discussed that. They're getting stimulus paychecks to help cover their rent.
Okay.
Yeah.
Good. So it sounds like the stimulus package is working effectively.
It is. Yeah, I mean, I've got tenants that are not working right now, but they are getting unemployment, and that's more than enough to cover what the rental rates are.
Okay.
Good. Do you see any areas right now in San Diego having more opportunities for investors or people wanting to get into the housing market as first-time home buyers, anything like that?
Absolutely. And kind of like the secret spots I talk about are Claremont and Linda Vista, because you're surrounded by job growth in Mission Valley in UTC, to your north and to your south. So I
And
love Linda
Sorrento
Vista.
too.
What's that?
Sorrento Valley is right there, and that's kind of our biotech hub too.
Absolutely. So that's I bought a duplex in that area a couple of years ago for that very reason. Anything around Balboa Park that isn't yet built to highest and best use on zoning. I bought a duplex in Hillcrest last year that's zoned for 11 units on the lot. Only had 2. That's a great type of thing to
We
buy
have to do
into.
another podcast on the tricks
Yeah.
of the zoning that you've taught
Yeah,
us.
zoning. I taught that in one of my real estate courses. We had a lesson just on zoning, 2-hour lesson. And then also the west side of Chula Vista and the west side of IB, because of the development, Chula Vista Bayfront development, in the west side of IB, you've got the $1 billion special forces facility that's near completion.
Nice.
Awesome.
Very cool. Great info.
But bottom line, I always say this: you don't buy a house, you don't buy a duplex, you don't buy a fourplex. What you're buying is the local economy around that house, around that duplex. That's why you can have, a 1,500 square foot home in San Diego for 600K. In that same 1,500 square foot home in the middle of Nebraska is 80K.
Mhm.
It's because of the economy is around that home. So you always want to know the economy you're buying into, if even better than the property you're buying. Know the economy you're buying into.
I love that.
So California and SoCal in specific, still a safe, still a great investment in regards to real estate over the next couple of years.
Absolutely. In fact, I was on a webinar yesterday. The keynote speaker was Ed Leamer, the most respected macroeconomist at UCLA. And he admitted that these are very unknown times, and there's a lot of bad things that are going to happen in a lot of markets. But he said of all the investments one can make, the stock market, bonds, you name the investment, he said California real estate is still one of the safest investments to make, because of our lack of supply relative to demand. There's a huge supply demand problem. And I don't care if the sky is falling, it's the apocalypse, it is a pandemic, it does not matter. If you have a supply demand issue in which you don't have enough supply for that demand, we could be in the apocalypse and things will still hold value. And I mentioned this earlier, we saw it with toilet paper. Like, who thought toilet paper would be able to be sold at a premium? Not legal, that's price gouging. But that's California real estate. We have been in a pandemic in California for a decade.
Mhm.
And the toilet paper is the real estate. There is not enough of it on the shelf. I'm serious. There's not enough real estate on the shelf. And that's in 10 years from now, there's not going to be enough California real estate on the shelf for demand. So we are going to hold steady on our prices in California. Absolutely. I wouldn't be buying a fourplex right now if I thought otherwise.
Yeah, that's important. And people watching this, you may think, we're all real estate agents. All real estate agents say it's always a great time to buy. That's not necessarily true. But, Patrick is here and we're here. We're we're practicing what we preach for sure. And we're all looking for great deals. And Patrick just got into escrow on this one. So we wouldn't be saying this if we weren't willing to invest ourselves.
Absolutely. I put my money where my mouth is. And I always say, it can be a real good time.
All right, Patrick, your volume
to buy, or a real bad time. Yeah, I mean, I do tell people when it could be a bad time to buy, and that's based on the market.
Pat, we're gonna have
you're breaking up, Pat. We're gonna have to get your internet going a little bit.
I was told by a wise person, copy that.
Okay, can you repeat what you just said?
Sorry, yeah.
How's it now? Good? All right.
Yeah, now we're better.
No, but I always say it's not so much good times and bad times to buy, but good markets and bad markets to buy into. California has been a good market to buy into for years because of the lack of supply. And it will continue to be a good market to buy into because of the lack of supply. You never want to buy into anything that has high supply or anything that has low barriers to entry. If you have low barriers to entry, like you can build homes like that in the Midwest, it's going to keep the price low. If you have a high barrier to entry, development in California, it's going to keep the prices high.
Okay.
And San Diego specifically, our geographical location keeps that barrier pretty high because there's not really anywhere to go. We've got the mountains and desert. We've got Camp Pendleton, Orange County, ocean, and Mexico. So where do we go?
Absolutely. And here's the other thing, guys. Because of the tax code, it is a good time to buy between now and December 2022. Because the new tax bill passed a law that starts to sunset in 2023 that allows you to depreciate a large portion of your real estate investment in year one, the year you buy it. So this fourplex I'm buying for $1.35 million, I'm going to be able to depreciate a little over $300,000 in year one, which means I get a $300,000 tax write-off. And in my tax bracket, that's equivalent to putting about $130,000 cash in my pocket. And that law starts to sunset in 2023. So I'm going to gobble up as much real estate between now and 2022.
Amazing.
Yeah, tax law is very important when it comes to investing in real estate. You got to know it.
Absolutely.
Any other advice you want to give to people looking to invest in real estate in San Diego or other hot markets during this time?
Yeah, the best advice I can give is don't listen to your uncle, don't listen to your coworker at the water cooler, and don't listen to your neighbor that don't have that don't work in real estate or understand it. Listen to someone you trust that is knowledgeable about real estate, and they will tell you the truth. I have talked a lot of my clients out of buying certain deals because, again, it's a good time to buy in San Diego. Has been for years, will continue to be for years. But not every property is a good buy. So work with someone you trust, like Alyssa or Nicole, and they will guide you in the right direction. Absolutely.
Awesome. Now, you've weathered a few storms here in your 12 years in real estate. So would you say any other financial crisis is similar to coronavirus?
Yeah, and in one way, they're all similar, and then I'll compare it to a couple. One is that fortunes are not made in good times. They're made in bad times. And the fortunes of 5-10 years from now aren't going to be made 5-10 years from now. They're being made this year. And it's going to be the people that take action this year. And that's every crisis. So take action. There's a bit of a morbid saying that buy when there's blood in the streets, even when the blood is your own. Okay. And Warren Buffett's is when everyone's being fearful, be brave. And when everyone's fearful, brave, be fearful. So now everyone's fearful. Be brave, go out and buy. But there's two recessions or two instances I would compare this to. And one is not the Great Recession, not at all. This one is completely different. It's not caused by bad economics, which the Great Recession was caused by. We were way off kilt. And housing's not going to take a hit the way we did in the Great Recession. I'd compare this one maybe a bit more to the dot-com bubble, in which everything but housing is getting hit. And housing is what's going to take us out of this recession. Housing is what took us out of the dot-com bubble. In fact, during the dot-com bubble, during that recession, real estate prices went up. Out of 3 of the last 5 recessions, real estate prices went up. And it'll probably happen during this recession. And the other being the Spanish flu. Obviously, you'd be naive to not compare this to the 1918 Spanish flu. And the stock market took a hit in the spring of 1918, just like the stock market took a hit this spring, but it took a bigger hit in the fall of 1918. And the reason for that was the majority of deaths, i.e. max mortality rate, happened in the fall of 2018, and that's when the stock market really crashed. So I'm hoping that our government is wise and we don't see a horrible fall of 2020, because that would really throw the financial markets off as well. So let's not open up the states and the economy too soon, because we'll just have a bigger beast that we face in the fall.
Nice. Okay.
But hey, what happened after 1918 and 1919? The Roaring '20s. And then after that, the Great Depression. But I'm telling you, fortunes are going to be made in the next 12 months. And we'll see those fortunes 3, 4, or 5 years from now as we go into the Roaring '20s. And then we'll probably have another cycle in the 1930s. Or excuse me, the 2030s, just like we did. But take advantage of the situation, because it's probably going to be one of the few situations we have for the next 5 to 10 years. We're not going to have anything like this again. That said, let's not, I mean, as much as I talk finance and economics, you know, I also feel for the real tragedy happening out there. There's people dying. And I always like to caveat when I'm talking finance and how to take advantage of the situation financially, let's not discredit the real deaths that are happening out there. My wife is an ICU nurse, you know, so there's definitely stress in my household. We had to self-isolate her one day because she had potential exposure. So I don't want to discredit really the real tragedy out there, and that's the deaths that are happening. My job, though, and your job, we work in the financial world, real estate, is to help people navigate financially what to do in the next 12 months.
Exactly. Well, please tell your wife thank you for everything she's doing as well.
Maybe she wants to be one of our guests too.
Yeah, she'll let you know how it's going in her unit. Yeah.
Awesome. Well, Patrick, this has been so much great information. We're so appreciative for you coming on here. Anything else you want to say before we wrap this up?
You know, just closing it out, thank you guys for having me on your show. I really appreciate what you're doing and educating clients, because that's the most important thing. I always say as realtors, we're not salespeople, we're educators. And I appreciate what you guys are doing to educate the world.
Thank you, Patrick.
Thank you.
Right. Have a great weekend. We'll talk to you soon.
All right.
You
Bye,
too.
guys.
Have a good one. Bye.